Karan Taurani joins in to discuss just that. And Karan, I can't help but starting off then with the one that's on everyone's lips or mouths, and that is definitely Swiggy. With the kind of big names checking in, as per what we understand, Hindustan Composites, a lot of Bollywood celebrities as well. Do you think that Swiggy can actually deliver?
Hi, morning, Aman. So I think definitely, there is a lot of interest for Swiggy because, we don't have too many internet-first companies which are, expected to report handsome growth of 30-35% on a consistent basis and also show an improved margin trajectory. If you look at the various online businesses, in fact, even the Swiggy DRHP has pointed out, we've got close to about 200 million online shoppers, and if you look at the food business, we've got about 80 million, customers there in terms of annual. And if you look at the quick commerce, it's only about 20 million odd users, in terms of online. So clearly, there is a lot of opportunity here in terms of penetration, in terms of user growth, in terms of driving profitability through various levers. So the interest, for the Swiggy IPO definitely is going to be high. But I think one has to really look at the valuations here and really compare this to market leader like Zomato. So I think in terms of valuation multiple, we believe that potentially there is a likelihood that Swiggy will come at a discount versus Zomato because if you look at the various parameters, right from the scale within the food business, the scale within quick commerce business, the profitability, the growth rates, on that higher scale, for Zomato are superior versus Swiggy. So definitely basis all these parameters put together, Swiggy could, potentially come at a discount versus Zomato for now. But, execution is the key here. So I think we'll obviously monitor in terms of, how things pan out. What is the kind of turnaround Swiggy can do post this capital raise? If they can, kind of gain market share, if they can, kind of improve their property metrics, the discount will converge or probably even, come on par over a period of time. But definitely, as I say, the interest is going to be very high for intent first companies.
Okay, fair enough. I just wanted to understand what the entry of Swiggy could mean, listing on the stock exchanges for the existing one, that is Zomato, and how you're looking just at the quick commerce space as a whole, given the fact that there has been so much interest and so many players entering the fray.
So I think the listing is going to be very exciting. It's going to keep Zomato also on toes. Of course, Zomato in terms of execution so far they've been top notch. Whatever guidance they've been given, they are kind of outperforming even versus their guidance, which is somewhere kind of being aggressive. If you call it in terms of the profitability within quick commerce, if you call it the growth in food delivery segment, if you talk about the growth rates in quick commerce, expansion in quick commerce, they've been top notch, right? So I think we'll have to see, if things change from here on after, Swiggy's listing in terms of how they are able to execute. So I think on a quarter-on-quarter basis, investors would be looking at performance of both these companies very, very closely, tracking metrics, tracking their guidance and everything put together. So I think, as I said, it's not that it's completely impossible. Swiggy does, have a chance, to improve their metrics, improve their profitability basis how they execute. But only time will tell. So for now, I think discount is somewhere justified. Versus Zomato basis the way they operate versus Swiggy, which potentially has got no track record as such in the listed space. So even if there are 2 to 3 quarters, Swiggy can officially make a comeback. And I think if you can take the case of Zomato, in the quick commerce side, they've been very, very aggressive, right? So I think that's the big growth engine right now. If you look at the valuations today for Zomato, I think about 46 to 48% of valuations today on our target price is coming from the food business. And I think from a growth standpoint, that business will somewhere stabilize at about 20-25% kind of growth rate on a steady state. And you will not see margin improvement, beyond the point, which means a 30% compounding story. But I think quick commerce is the big game here. So quick commerce, Zomato is a market leader as per various industry and media report numbers that are floating around. And this segment is going to grow at 60 to 80%. In fact, this category is going to expand in a very big manner because even e-commerce companies are feeling the pinch now, and they're also venturing into quick commerce. So I think quick commerce is the bigger gameplay here. So we'll have to monitor in terms of what Swiggy does, what Instamart does within quick commerce business, because I think this is something wherein they've entered herein before Zomato again. But again, Zomato, because of the aggression and because of execution, they've kind of moved ahead of Instamart.
I wanted to get in your sense as well on the Hyundai Motor IPO as well. And given the kind of numbers that we're working with, given the market cap that it has in Korea at about $39.6 billion, if the India market cap ends up at about $18 to $20 billion, the value of the entity would be a major premium to, a Maruti Suzuki, for instance. Is that justified according to you?
So I think, most of these companies, as I say, most of these MNC companies or other internet first companies which want to get listed, they really want to play on the valuations, right? And I think this is, one big thing to watch out for. So there will always be high interest, for these kind of companies, basis the way they execute. Valuations at some point of time will appear expensive, but, basis execution over a few quarters, 2, 3, 4 quarters, or, couple of years, you will see corrections also happening as well. So even if valuations somewhere for a company which is coming for IPO are at a massive premium, eventually it's the numbers which do the talking. And if the execution is not correct, then you see the stock price, even kind of, seeing a fall. So clearly, I think this valuation premium in India market is here to stay. Everybody is very frenzy about it. So many companies are trading at very high valuations. Everybody's betting a lot in terms of discretionary consumption spending, whether it could be in the likes of online spends, quick commerce, whether it could be in the likes of consumer-led QSR businesses or the premium alcohol businesses, or in terms of spending on cars. So I think valuations are going to be at premium given the kind of opportunity India market is posting today.
I just want to steer the conversation back to Swiggy, and let's use Zomato for benchmarking purposes. Zomato's market cap is almost 2 lakh crore, in and around 2 lakh crore. What to your mind should be the deserving market cap of Swiggy? There are some businesses where they are competing, and there are some businesses where Zomato has initiated a fresh investment, which is the entire event management business. Considering that Zomato has 3 businesses, Swiggy only has 2. So how does the relative valuation work of Swiggy versus Zomato? And I'm asking this, I'm slightly being descriptive with this question here, because everybody in a sense on social media, on our Twitter handles, is comparing Swiggy and Zomato IPO, and then deriving at the benchmark for Swiggy. Zomato is X, so Swiggy should be, Swiggy should be small x.
Firstly, you have to look at this, on a business to business basis, right? So let's take the case of Hyperpure. Now, today on our target price of Zomato, Hyperpure is about 15 to 16% of valuation contribution. So Swiggy does not have Hyperpure. So, that discount goes away. Out of $30 billion, that discount goes away. The second factor you look here is the scale factor. So if you look at Zomato in terms of quick commerce, they are, about 90 to 95% higher versus, Swiggy. If you look at the food business, again, they're about 25-30% higher versus Swiggy. So the scale factor discount will also kick in, because eventually valuation multiples will be in terms of what scale you operate at, right? Third parameter to look at is in terms of profitability, right? So if you look at the food business, Zomato was at about 2.8% EBITDA as a percentage of GOV. And if you look at Swiggy, the food business, they were at break even. And similar is the fate for quick commerce as well. Swiggy Instamart is still making losses of more than 1,000 crores, and Blinkit is largely on the path of break even. So I think putting all these parameters put together, you're going to see about 25-30% discount basis scale, 15% discount, versus the Hyperpure business, and then some discount on multiples, because growth rates have also not been superior for Swiggy despite the low scale that to operate at. So net broadly, I think you could see a discount of anywhere between 50 to 60% on Zomato's valuation as on today, and peg that to Swiggy. That is the number as of now. This can also be higher basis the demand supply and basis how Swiggy is able to execute in a better or a bad manner. But yes, a 60% valuation discount today, not in terms of multiples, but in terms of total company valuation, is something which we could see for Swiggy for now.
15 to 16% or 50 to 60% discount to Zomato valuations?
60%. So as I told you, 15% is because of Hyperpure, 25-30% because of scale, and another 15-20% valuation multiple discount, which means 60% total valuation discount versus Zomato.
Okay. So then can I say that if Zomato's market cap is at 2 lakh crore, Swiggy's market cap should be between 80,000 to 1 lakh crore?
Correct.
Okay. Now, are Zomato valuations at 2 lakh crore justified? Because that also is the other question. We're assuming that 2 lakh crore for Zomato is justified, and given that the competition in quick commerce has only intensified, Big Basket is getting aggressive, Flipkart has entered into it, Zepto has raised capital. What happens if Zomato valuations, they come down from 2 lakh crore to 1,50,000 crore? Where will Swiggy settle then?
So if that happens, then of course, you can see this from two angles. One angle is that Zomato loses market share to Swiggy. As I said, Swiggy gains market share both in food and quick commerce, which means Swiggy valuations moves from 80,000, 90,000 crores to about 1.2, 1.3 lakh crore. And Zomato is losing market share. And so that's why from a 2 lakh crore, 2 lakh 10 lakh crore, 2 lakh 10,000 crores, it moves to about 150, 1 lakh 50,000 crores. So that is quite a possibility. But that will only depend in terms of how things pan out from here. Because as of now, given the track record, given the numbers of Swiggy, given the track record of Zomato, given their guidance, given whatever, Zomato is definitely going to be at a commanding position versus Swiggy for now.
New incubated businesses in Swiggy, which could really increase to the option value or increase the sum of part business, sum of part valuation of Swiggy. For example, when Zomato acquired the quick commerce business, it has surprised everybody. The fact that they bought the Paytm event business, that could add a strong optional value. Has Swiggy also incubated similar businesses which could create a lot of optional value if they're able to scale it up in coming years?
See, it's very different to its own in terms of approach, right? I mean, Zomato would have acquired the going out business because they already have a going out business, right? Swiggy rather does not have in a very big manner, right? They are more focused in terms of the dining business, the grocery, which quick commerce, and the food business, right? Now, Zomato may have different intentions in terms of cross-sell, upselling customer base to both these businesses, and they might have different plans about it. But again, in terms of overall valuation contribution, the going out business or the events business is not a big delta. I mean, today, in terms of overall market cap contribution, the going out of the live business is just about 1% contribution. So no matter what that number, kind of scales up to, even if it doubles over the next, 2 years or other 3 times, 4 times, it's going to be sub 5%. So I think that business, one should not really look at it. I think rather one should look at the quick commerce business more actively. And I think to your question in terms of competitive intensity growing, new players coming in the quick commerce business, I think that is good news, because the e-commerce category is very, very big. Quick commerce is just, kind of taken off. And the e-commerce players today are entering quick commerce because they are also feeling the pinch of quick commerce somewhere. So I think, quick commerce in terms of business model, economics, profitability is quite sustainable. And I think if the quick commerce business scales up beyond the metro cities, goes to non-metro cities, there is ample opportunity for 7, 8 players to exist in the market. Not necessarily that you'll have only 3 or 4 players. And to put it all, given the kind of track record execution, we would still maintain our bet on Blinkit for now.
All right. Thanks so much then, Karan, for sharing with us your thoughts. Certainly very closely eyed IPOs, dhamaka ones, if you will, that are anticipated. Good to get in your thoughts.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.